Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right. Good morning, everybody. Welcome back to another live stream. Happy Monday to you. We are just getting going here on what is a very, very busy week here. We've got so much news this week. We've got so many earnings numbers out of the United States for the stock market. It is expected to be a volatile week. And we've got coverage here lined up for you all week long. Thank you for everybody who's tuning in here as we get started. We've got a lot of stuff to talk about. Taking a look here in the early start of the session, what we've got is we've got the pound USD trading lower, got the euro trading lower, NASDAQ selling off, dollar index up, Dow slightly up, S&P flat on the day. And I'll be the first one to say, guys, I think that there's a pullback coming on these indices. I could be wrong about this. I could be dead right about this. But I think that the indices might have a little bit of struggle this week. We've seen some earnings numbers coming out of the U.S. that were not particularly lovely. And, the market right now is kind of priced for perfection. What I mean by that is that, the consensus is that inflation is going to come down and continue to be no problems there and that the economy is going to stay strong. And while I do think that the economy will stay strong, I think that there might be, and this is my guess for the week, my best educated guess for the week, is that we're going to hear from Jerome Powell and we're going to hear, hey, all this strong economic data is actually pushing back our expectations for rate cuts. And it's a big sort of educated guess. But if we do start to see that, you're going to see some interesting moves in the markets. And we'll be here to cover all of it. Gold selling off here at 2,036 an ounce, 2,037 an ounce, give or take, as price ticked up to that level. You can see we did get some immediate selling here on the New York session open. Let's go take a look at our individual. Let's save this layout really quick, and we'll go take a look at our one-on-one charts. And let's go, I'm going to go to single chart mode. I'm going to switch over to the dollar index. Let's start with the dollar index. So the dollar index, we'll switch over to the 4-hour chart here. And look at this, the dollar index starting out strong already, pushing up against the upper limits of this resistance area. You can see the market has been very range bound, but the question will be this week, are we going to get the economic data out of the US to suggest a bigger break to the upside for the dollar index could come? That'll be the story. I think, Friday you have NFP. So a couple of things to keep in mind here. On Wednesday, you have statements from the Fed. On Friday, there's something in Thursday too. Claims, and then Friday you have NFP, right? Let's actually just pull up the economic calendar while we're talking about it. Again, it is a really, really loaded week. And a lot of, if you're trading the indices, if you trade NASDAQ, if you trade, well, first of all, if you trade NASDAQ, a lot of people who trade NASDAQ are not truly tuned into what will likely drive the NASDAQ tremendously, which is big tech earnings, which is this week. We have several of the big, leaders of the NASDAQ reporting their earnings and their forward estimates this week. If you trade the NASDAQ, NFP is probably second to some of those numbers. Because again, when you have the Magnificent Seven, which we lost Tesla kind of recently, so maybe Magnificent Six, I don't know. Some of those big tech names reporting their earnings are going to be leaps and bounds what moves the NASDAQ. So should be really interesting to watch for those. Well, surprises in those numbers will move the NASDAQ. Otherwise, you get NFP, which also will likely move the NASDAQ. So really big week. If you trade indices, if you trade gold, it's huge. If you trade the dollar, we'll be covering all of it this week. On Friday, you get average hourly earnings, which is key, employment change, unemployment rate, and consumer sentiment. So Friday is a huge day, but so is if you're a UK, if you trade the pound or you trade the FTSE, even gold. When Thursday is really big too, because you get the Bank of England and their bank rate votes. This is probably what's the most important thing here. Where their consensus is with votes on whether they should hold or cut rates is going to be huge for the pound. So get ready for some volatility this week, guys. I'm telling you, it is really big. You have PMIs on Thursday. Wednesday, you've got FOMC. That's massive. We know that. ADP in the morning. Go all the way into the press conference at 2:30. I mean, you just have a massive, massive week of news. And it's been a little while since this is like the first, I would say, banger of a news week in terms of stuff expected volatility wise. We were expecting some huge moves. And I'll say this, I don't think that the dollar index here will stay in this range. I think we're going to see a breakout one way or the other. Could be to the upside, could be to the downside. We'll have to wait for some of that data to come in. But again, the biggest market movers this week, if you trade indices, are actually stock earnings, right? Apple, Amazon, Google, Nvidia, what do their earnings look like? What they report is going to be massive for indices. That'll be something I'll be covering on the show. I know, we've moved further and further towards indices on my channel, which has been the long-term goal. I love trading the indices. But you have to understand at some basic level, stock earnings and their reports are massive for risk sentiment. Even if you don't trade the indices or individual stocks, risk sentiment and US stock earnings are huge to marketplace sentiment. Because again, if you get a, you want from a market sort of fertile crescent zone, you want big stocks like Apple and Amazon and Google. You want those companies to be cooking with gas. You want them to be making lots of money because they're going to hire lots of people, massive stimulus to the entire world's economy, right? So really important that you see those companies continue to do well and to be projected to do well if you're talking about positive risk sentiment. The dollar index is pushing here up to the top of this limit here. And I think that we get a really interesting story if you're watching the dollar index, because the dollar index is creeping higher. At the same time, I believe the yields are not necessarily creeping higher, which is interesting. But noticeably, yields kind of bottomed in December. We've been rotating higher on the 10-year. The 2-year has been slightly off of its lows. But what this could suggest is that perhaps the strong economic data that we've gotten out of the US could shift a little bit of the dollar thesis. And perhaps if we get some strong data out of the US this week, we could break through the tops of these ranges. If that happens, again, it is probably going to put pressure in many other areas in the market. So if you're watching the dollar index, what I would say is the signal here to look out for would be a breakout on strong data, probably Wednesday or Thursday or Friday. WTF, right? Wednesday, Thursday, or Friday. If you do get, for example, something from Jerome Powell, like for example, if they say, hey, interest rates are not going to be a rush to get them down because yes, we've seen some inflation cooling, but we're worried about the strong economic data, which could spike inflation again. Okay. So that's my guess. That's my guess as to what we could hear. We could hear a little bit of a pushback, and just a little pushback could really change the outlook for markets. We're seeing it in the Russell, which is a more sensitive overall to interest rates area of the market. We do not see it seeing the same rally as the NASDAQ has had recently. So there is a little bit of evidence cooked into the numbers there. Take a look at gold here. Gold is struggling at resistance yet again. And again, speaking of sensitive areas to rates in the market, right? Take a look here. You've got, of course, gold hitting up against a resistance point at the $2,035 an ounce mark. Can't seem to break out. And again, if you want to talk about a breakout to the upside, you probably want to hear Jerome Powell say, we look good for rate cuts in March. Not necessarily saying it directly like that, but you want the market to essentially hear, okay, rate cuts are coming from in March. We're seeing significant progress. If you get that, gold probably breaks through this level. And again, that would be a huge signal to gold bulls, but we're not quite there. And I think, like I said, I have been vocal, and I will be the first one to admit to everyone listening and to all of my viewers, I'll be the first one to admit if I'm wrong about that idea and we do hear from the Fed, hey, significant progress and we're probably set to rate cut. That's what the market hears, essentially. I'll be the first one to be like, hey, you know what? Ignore my idea of maybe the Fed won't like all this strong economic data. If I'm right about my thought process, though, and we hear from the Fed, hey, this economic data is strong, we're worried about inflation becoming a problem again, gold is probably breaking through the lows. If I am right about that. Now, how do you actually trade that, Nick? Like, am I just shorting it right now? No, because I still use technicals, right? I would like to be short gold if that scenario that I'm discussing actually plays out. There's my setup. If I'm completely wrong and gold breaks through the highs, I have to acknowledge that I'm wrong and possibly even switch teams. That's why this week is so pivotal to everyone. So it's really, really important. Nick, did you get absolutely wrecked this weekend? Is my hair staying in front of my face? Is that making you think? I don't know what's going on with my hair today. I have one little strand that wants to go down. If you're talking about markets, I'm actually very, very not... I'm very light in terms of positioning. So market-wise, no, not at all. Yeah, so we'll watch gold here. If gold can break either ways, should be really interesting. But yeah, imagine inflation isn't sticky, and that with excluding food and energy prices, inflation is going to be tough. What are your thoughts on the euro fundamentally? Let's go look at the euro dollar real quick. The euro has been freaking out a little bit because the GDP numbers out of the euro region have been a little rough. There is an argument to be made that perhaps you see you see a little weakness on the euro because of that, right? I think that's probably what's cooling the market here this morning. Euro kind of broke its upward trajectory here, right? It was on a real strong path to the upside, kind of broke out. Again, you have economic data, and this is again going in line with our dollar bullish in the short-term thesis, because you have Europe here talking or forecasting a recession that took place or is starting. Meanwhile, the US numbers are just coming in strong. I bet you it's a similar story if you look at euro pound. I bet euro pound is dropping. Let's see. Yep, euro pound is dropping. That would make sense because, again, the UK has had some reasonably strong numbers compared to Europe. Should be an interesting story to watch how that plays out. But again, I really do think that this week the story is all about the US dollar with NFP. For stocks, it's all about the earnings reports that we're going to get this week. Megatech is all over the place. So it should be a very, very key week. Quick talk on the Magnificent Seven. I think we might have lost one. Tesla completely fell apart. Down like 13% in a single day. It was absolutely a wreck. And not to mention, from the start of this year, I think it's down like 30%. Right? So here is Tesla. Tesla's down like 26% since the start of the year. It's crazy. And it just shows you the resiliency of the NASDAQ. The other ones are so strong that it's still going up. It's kind of crazy. But of course, the way the NASDAQ works, it's weighting many stocks, right? 100 of them. So just because one of them falls out of bed does not mean that it's all over. But should be interesting to watch how that plays out this week in terms of tech earnings. We'll watch those close and report on those. Guys, in just a second, we're going to have Frank and Ivan join me here on the show. Should be good to talk a little markets with them, see what their forecast is for this monumental week. Before we switch over, I do want to just say, if you guys missed our flash sale on Friday, we are extending it here today. If you have not already picked up a copy of the Edge Finder, we are doing, I'm sorry, it is actually 45% off. This is a massive, massive discount that we're doing currently on the Edge Finder. If you'd like a copy of our tool, we work day and night, constantly, thousands of hours in putting into what you guys see on the show regularly, the Edge Finder, the tool that we use to source market data, to go through, and find setups and ideas, and our top setups algorithm. All this stuff is a tremendous passion project for us here at A1 Trading. And if you'd like a copy, we are currently doing a massive, massive discount, 45% off if you use this direct message link. I'll show you how that works. When you click that link, it'll take you to a chat bot. Well, not a chat bot, a chat where you can speak with a person, and they are not a bot. You're going to speak with a real person on our team. We have a couple people who are dedicated to setting people up with copies, answering your questions, giving you pricing details, all that sort of good stuff. So if you'd like to speak with someone on our team, just click that link, put your name and email in, and chat with them using this icon here. That will get you the 45% off deal while it still lasts. So take advantage, click that link, get a copy if you have not already. We've warned already and transparently that we are raising prices this year. We are restructuring some of our concepts. And so there is your fair warning. With that said, we're going to take a quick break here, thank the sponsor, and then we're going to come back and talk to Frank and Ivan about some market trading setups just after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, and we're back with Frank and Ivan. What's going on, guys?
Hey, how's it going? Hey, Ivan.
Hi, Frank. Long time no see.
Has been. How have you been?
2024 has been great.
It's good to have both you guys back on the show. And this week is huge. And I guess, well, I'll go to each one of you first. We'll go to Ivan first, I guess, on this. Ivan, this week, what are you looking at most in terms of data, in terms of charts, whatever what's your focus this week?
I haven't looked at the calendar, but I guess there's some FOMC on Wednesday. That's going to be dollar bullish. I guess there's an NFP on Friday. That's going to be dollar bullish. So yeah, I think dollars.
What makes you say those things are going to be dollar bullish?
Oh, because we have had higher than expected CPI, higher than expected GDP. So all the numbers are higher than what it was supposed to be if we were supposed to go in the direction of lower interest rates.
Okay, fair enough. Yeah, that's kind of been my thought process as well. What I guess makes me a little bit nervous is that
Don't be nervous.
what makes me a little nervous is that we've also had some good progress in the inflation department. So that's where my question is. Are we going to hear from Jerome Powell that the economic data being so strong is a deterrent to them cutting rates? Or are they just going to brush aside the economic data and say, well, we're seeing the inflation reads come in cool? That will be the interesting part.
Sticky is the word, and he's going to acknowledge the higher than expected or higher than projected inflation. And also PCE came out at least on target for the month of a month at least. So it's not going in the direction he wanted to, so he has to pause. But of course, he can do a Jerome Powell special, which is just I don't care about short term, and say that we are already going lower overall in the more longer term trend. That is the risk for Wednesday, and that would be dollar bearish.
Okay, fair enough. And Frank, what do you think? Well, I mean, I like Ivan's point. I agree. I mean, I'm just pushing back just for the sake of, what the other people that disagree with us would probably say. They'd say, well, the inflation reads are pretty good overall. What do you think, Frank? What are you watching the most this week?
Gold and oil. So
Okay.
I don't think Ivan is wrong either. Higher CPI is, that's pretty much, it's very obvious. If we were to guess, I think the logical result of Wednesday's decision is that we're not going to hike, and we're not going to see we're not going to see cuts, and we're not going to see
Right.
March cuts. And he's probably going to talk about the same thing of higher rates for longer. Meanwhile, entertaining the idea that cuts can happen this year. And I do think that the dollar kind of has the upper hand right now. And if you just look at COT, which is what I was checking out this morning, is oil being the top net long position of the week, gold getting bought, dollar almost unchanged. But then again, you look down at everything else, and you see that SPX, NAS getting sold off. So I don't think going into this week I'm very bullish on the stock market, but I am looking at the metals and oil for now, just because higher inflation is good for oil too. It's good for gold as well, but gold is kind of a mixed bag. It just depends on economic sentiment and stuff like that. So I'm going to be watching these. I'm already in a gold trade right now. So
Okay. What's the gold trade? Are you long, short? What are your thoughts on that?
I went long on this breakout. Let me share my screen on this tab. It broke out and then closed on like an hourly candle.
Mm-hmm.
So I got it somewhere around here, and it went up, came all the way back down. So, not looking great right now, but
Yeah, we'll have to continue to watch it. I do think, again, gold this week is going to be probably volatile, because if you do get, as Ivan pointed out, we've had strong economic data. There's tension on both sides, because you've got people who are going to say, well, they're still going to rate cut because the inflation numbers are still coming down. And there's people like, I think all three of us, who are pointing out, well, the economic data could scare the Fed into thinking, well, inflation could come right back if you don't really squash it. And so we're going to get some answers. That there's tension on both sides, and where there's tension on both sides, you're going to get volatility. So once we get some sort of confirmation from Jerome Powell, from the Fed, where interest rates, are likely to go, we're going to get some confirmation there. We're also going to get confirmation from NFP. So this week is probably one of the most volatile weeks. That would be my guess. Not to mention, if you're somebody who does watch stocks, I pointed this out earlier in the show, but we have several key names reporting their earnings and their forward earnings. And we're talking about a stock market right now that is very richly valued. Historically speaking, price to earnings are very, very high. You've had companies like NVIDIA, which, there are wonderful growth stories here, but there is also the argument that, perhaps these things have gone too far, too fast. And we're going to get some, I would say that if you do get anything that really threatens the stories of the indices this week, you could get some very violent reactions. So should be a really, really interesting week, to say the very least. But I guess, Ivan, on the gold and oil front, do you have any thoughts on those? I know Frank just mentioned them. They're kind of range bound right now, but what would you be looking for possible setups if you were to trade them?
What is important to note is what made oil rise this morning was an air attack that killed, was it 3 US soldiers in the Middle East?
Mm-hmm.
If there is no retaliation from the Americans, which probably will be, this one is going to fall. So it's like yet another one of those pop and drop if nothing else happens. I'm literally just answering the same question in chat in Discord, but so for me, those are going to drop unless you get escalation or you get more missile attacks. The other thing that is important to note, as far as I can see, is more and more buildup of tank ships outside of the Bay of Aden that's supposed to go through Suez Canal because of the Yemen situation. That's a bit of a slow burner of risk off. That can definitely make oil and gold go higher slightly as that situation continues to not be resolved, and when there is a situation that escalates, that's going to drive them up. So until there's nothing else, those are probably going to drop.
Okay. Yeah, fair enough. I think the escalation component, the only other thing I would say that could really spike the price of oil could be on the demand side based on what we've talked already about. So NFP, if the labor market's super strong, could have some upward pressure. But if the labor market comes out cool, you could seriously give back some of the gains that we've seen there. And kind of the inverse effect for gold. So it'll be interesting to watch, because if you do get strong economic data out of the US, gold could likely actually drop. And the key level for me, price action wise, would be the 2015, 2007 level. But if you get some cooling in the labor market, very possibly could break out. Or, as you pointed out, on the supply side threat, if you do get further escalations, on tension wise, that could also be a really big factor. So should be interesting. Frank, what do you think about the indices? Like I said, they've been pumped up recently. Do they have more room to run? Do you think they're pulling back? Do you think they're reversing? What do you think?
I am kind of staying away from them for now. I don't really see. I see limited upside still. It looks like we've topped out on the NAS, like around 17,600. Day-to-day strong economic news is going to be good. So if we see jolts coming in higher, although it's not a very valuable metric, in my opinion, a higher jolts numbers can be good. Any economic number that is good will be good for the stock market. I think it's just what Powell says and what inflation says on our next report. And then on Friday, when we got NFP, another economic labor number higher than expected is going to be good. But there's also a very big gap between the expectation and the previous number. So it's almost like it's leaving some room for a mixed sentiment, I would say. So we got 177K expected. 216 was last month. So somewhere in the middle is going to be better than expected, but worse than last month. And there's that big gap is making it almost seem not like a setup, but it is setting up for some mixed sentiment just because of that. So I'm not really sure where to go with the indices right now. They've been overextended for a while, and because of the recent, we had the topic of debate, are they going to cut in March or not? I don't see why. I don't see the logic behind it, because we're still not there at our inflation target. We saw an increase last month. So what are we going to cut for? I think rates need to be higher for longer, and I think Powell's going to say the same.
Fair enough. Well, yeah, I think that seems to be kind of the consensus. And what's interesting is, well, that's the consensus with us three. But what's interesting is that's not necessarily the consensus across the board. So we'll see. That's why I think that volatility will be interesting to watch out for. You mentioned this earlier, Frank, but I just wanted to loop back and highlight for those of you guys who didn't catch the COT components that Frank pointed out. We have U.S. oil was one of the biggest increases. Well, it was the percentage basis biggest net increase this week. We had bonds also get bought, which I thought was really interesting. The Nikkei, the Canadian dollar, the Kiwi, South African rand, gold was slightly bought. US 30 and the US dollar very slightly bought. On the flip side, some of your biggest losers of the week, I guess, the latest filing, you've got silver, platinum, the Swiss franc, the NASDAQ, the euro, the Australian dollar, the pound, and Bitcoin. You know, the week before this, we had just nothing but selling everything across the board, except for I think it was the pound. And I thought it was interesting. This week, we have a little bit more of a mixed bag ahead of NFP. So these are the big money moves ahead of NFP, which will be very, very interesting to watch this week. And also noticeably FOMC. We mentioned this earlier. We're doing our 45% off sale right now. If you shoot us a message, you can get the biggest discount that we offer on the Edge Finder. We'll drop the link to that in the chat in case you're wondering. And also, I do want to mention something. If you're a member inside of our VIP Discord, we do offer coaching webinars, and our host is right here below me. Ivan does all of our coaching webinars, and if you're somebody who is looking for even one-on-one coaching, Ivan does offer that. He puts on group sessions where you can ask questions within the group. So if you're somebody who's already in the membership group, make sure you're tuning into those. They're no extra charge to you to come hang out with Ivan and ask questions. And also, if you're interested in one-on-one coaching, if you're looking to work with somebody, make sure to message him there. Frank, Ivan, and I, we are all three inside of the Discord. That's what's inside of our service. So if you'd like to come hang out with us, you can shoot us a message and find out more information. Ivan, thank you very much for coming on. Maybe we can get you to come back later this week. This week is so busy. We'll have so much volatility. Can we get you to come back? What are your thoughts? What do you have to say?
I just want to say one thing, please.
Yeah.
The market has priced in a first rate 100% rate cut in March for euro, and then there is a 50-50 chance they're going to cut. The market is going to cut in March. So right now, when Powell on Wednesday says either way, this is now going to move. So right now we have a 50 chance of dollar bullish or dollar bearishness.
I think Ivan, what you said there, that is the source. Point blank period. That is the source of this week's volatility, is the chart that you've got pulled up. Whether that swings to the left or whether that swings to the right, that's what's going to cause everything to move violently. So should be very interesting and an aggressive week ahead. Ivan, maybe we can get you to come back later on this week. Thank you for joining us on the show.
Thank you very much for having me. All
right. See ya. Frank, same thing. Thanks for your thoughts on everything. Should be a crazy week. And I know you and I will also be watching the tech earnings, which should be really, really key. So we'll have you back on the show to talk more about it throughout the week and catch up with you in just a bit.
Sounds good. Thank you.
See ya. Cool, guys. Yeah, really, really key to get that. I think, this stream right here is probably the slowest stream that we'll have all week, because we don't have a bunch of economic data. But what Frank and Ivan just did for us to lay out the week ahead, what we need to think about, what we need to be prepared for, was huge. And I hope you took some notes. I hope you at least stored something in your brain for this week. It is a very, very pivotal week in markets and sets us up for February. Things are going to go one way or the other, and we're going to be here to report, cover, and trade all of it throughout the week. I mentioned this earlier, but let me just reiterate. If you're somebody who uses or would like to use our software, if you're somebody who watches our shows, if you watch the videos, if you enjoy what we showcase in the software, including our new feature, by the way, the bank forecast feature, you can now look at any of your favorite currency pairs as well as gold and get research team outputs summarized in your charts. If you'd like to see what banks are forecasting ahead, we have just added this feature. It's a wonderful new feature, and I've already heard a ton of good feedback from our existing customers who are using our software. And if you're an aspiring Edge Finder user, you don't yet have it, like I said earlier, this is the time to get it. We are currently doing 45% off. It is a huge discount to its usual price, and that offer will not be there for long. Shoot us a DM here. Use this link. We just dropped it in the chat. Click this link. Send us a direct message, chat with someone on my staff who can get you set up with a copy of the tool before that discount goes away. Should be a really exciting week, guys. Thank you for hanging out with us, and I hope you have a great rest of your trading day, and make sure to tune in. We'll be covering all the rest of this week and all the major news. So see you then. See you guys.
All right, thanks again for watching today's show. Our goal at A1 Trading is to continue to bring you free value through our daily videos and articles, keeping you up to date with the latest market coverage. If you like our content, make sure to subscribe for more. And hey, I'm going to need you to get out of here. We got some heavy equipment on its way, and you're kind of in the way. So you need to move along. Frankie, that hard hat needs to be on your head.